Welcome, ladies and gentlemen. This is Anthony with Simplified Profits, and we're going to do a quick rundown on the Magnificent Seven, so to speak. Um, I don't like limiting myself to 7 stocks, but I do like keeping a tight trade list and investment list. And let's take a real quick look, starting at Tesla, ladies and gentlemen. So it is flirting with this 200-day moving average, which it already broke down once. And I'm telling you, anything that crosses under the 200-day moving average is a no-go for me. Before my portfolio can hold it, it's got to be able to hold the 200-day moving average. And let's just take this and draw a quick line here, ladies and gentlemen. It is not on a good long-term trend. Um, that could easily cross under the 200-day moving average. I don't really follow none of the fundamentals on companies. I'm more concerned with the stock chart. Stock chart's got to be bullish before I enter. It tells you everything you need to know. And I'm not a fan of this. If you look at the weekly, you'll see the weekly was overbought here and is pulling back. It's just not enticing for me. I mean, I like Tesla. I like what Elon Musk is doing. Love how he bought Twitter and made it a free speech platform. And you know what? I'll admit when I'm wrong, because back when this thing was $1, I remember when this came out. I've been trading since 2001, and I'm in the auto industry for my career field. And I was blasting on them, thinking, who was going to buy this electric vehicle? They sold one this year. They're losing money. This company will go bankrupt. Man, if instead I was buying in on that speculation and dumping money on it, it would have been a great return for me. But hey, I don't look back and get upset. Just learn from it. And you know what? I probably wouldn't have done anything different if the same company came out today. But that's probably my least favorite chart out of the Mag 7. Take a look at Apple real quick. It is, I mean, it's up there, but we could have a double top here. That could be a cause for concern, ladies and gentlemen, when you zoom out on this. And you can see it is flirting with that 200-day moving average. I just would be very, very careful. That could be a setting a top for Apple. We see the gap down there. Just be very, very cautious. I hate double tops. It's a good time to pay attention to what's going on. Let's see what else we got. Amazon. It is a bullish looking chart as of lately. It crossed over the 200-day moving average down there. And if you've been buying it on pullback since then, you'd be doing pretty well. But it just came out of the oversold position, which we said a few days ago. Be a good buying opportunity when it was 145-ish. And it could have room to run back up to all-time highs, ladies and gentlemen. So Amazon's got a little room there. Down here, as far as I'm concerned, your time to buy was a few days ago. But hey, never know if this thing keeps ripping. Personally, once it's out of the oversold condition, I'm not a buyer. I'll wait for the next swing. Google, I mean, this thing pulled back, consolidated, not really even consolidated, but used a 20-day moving average, which is that middle line in the Bollinger Band, and really bounced off that. That was as far as a pullback it had this time, and it looks like it's had a couple strong days and may continue to break out past this little, might have a little resistance right where it's at. But if it blows past that, ladies and gentlemen, you might be seeing that's a little stronger resistance when you zoom out. But I mean, 150 might be pretty easy for it if it blows past that. Meta. I mean, this thing, if you would have just bought it when it gapped over the 200-day moving average, you'd be up 88% in 12 months. Which I've seen, better companies as far as that run goes, but it's still a good bullish stock chart. Once again, it did the same thing Google did. It didn't touch the bottom Bollinger Band. It didn't even come to the oversold position, and it bounced off that 20-day moving average. Usually when it bounces up the 20-day, it's a pretty bullish sign. It's going to continue to rip up. Not here. I'm not a fan of Facebook at all, but hey, it ain't about what I'm a fan of. Don't ever fall in love with a stock. Don't ever hate a stock so much you don't make money in it, unless it's just something that you know, you just don't want to own for. It's just, like McDonald's. I'm not going to own McDonald's. I don't believe in it poisoning our country with the food it's providing, but it's probably a pretty profitable company. NVDA, this one is broke out, ladies and gentlemen. I mean, that is a bullish looking chart. I mean, it's pulled back to the oversold. Would have been your buying opportunity there. You had a buying opportunity here. And unless you want to buy on the breakout, I'd be waiting for the next pullback. But I mean, we could see, 550, 560 before that, maybe. Um, just even numbers kind of stick. Then next up is Microsoft, which, I mean, this company is just a monster. I mean, you had some consolidation here. You might even continue to consolidate on that tight Bollinger Band before it rips up, but this thing could easily break up again. But I feel like a lot of people that own Microsoft don't sell Microsoft. It's besides people trading it. So it has been a monster, ladies and gentlemen, and that right there is. I'd be watching that consolidation. It's going to break one way or another. It could break down and break down to the 200-day moving average, but looking strong the last couple of days. And that is it, ladies and gentlemen. Make sure you subscribe if you haven't yet. I'm out.